Good morning. It's Harvey Jackson. Just going to get through some news items and end of the month. There's usually some pressure on that, and it's Friday. Those are not real positive trading days, so it should be a shorter video here today. Argentina traders have been placing bets on faster devaluation of the peso, and with that, farmers are hesitant to make sales as the need to sell is they're actually selling corn, as you stated in here, rather than the soybeans because of just the price differential. But there's a good size tax that's on there already, and the president of Argentina is actually counting on some of that money getting converted over to U.S. dollars because they have to pay back the IMF or the International Monetary Fund uh, in U.S. dollars. So it's a cat and mouse kind of a game here. Farmers wanting to hold out more, and they've been known to hold out quite substantially, but it's the percent of change, just because they pay taxes on products that they buy and pay taxes on the products that they sell, unlike our progressive tax system that we have in North America. India offers tariff cuts on farm imports, and I think I've said this in the past. This is the country that's probably the most protectionist and have the highest duties on products within their own country, and that all by itself, it it's going to be a negotiation for the U.S. and India, especially if there's some products that can fit to go in there, because the reciprocal tariffs are going to be a big deal at some point. So you can Karen or Susan Shroud has put out this just where the corn soybean ratio has been versus this upcoming year. So the purple is last year and where we're trending right now. See a little bit of a leg up here, and that's the soybeans actually trying to recover versus corn falling apart. Here's just another interesting one. It's just the oil share starting to get back above the well above the 40. And that while that's meaning on the crush margin, the oil share is contributing to the profitability of that at 42%. U.S. drought monitor came out yesterday, and only drought has reduced in the corn soybeans, but the one area that I'm going to point out is the winter wheat, and it has not improved as of yet. But I'm not going to say that it's a large number of drought or high number of drought either. But that plant is growing. These are not growing yet. This one is growing, so it's going to be something to watch. Hopefully, it can stop the bleeding that we're seeing on some of the down or pressure on wheat that we're seeing these days. So you can see the bullseye there, but there's actually a fair bit of winter wheat over in this area, and there's a bit of drought there too. So we'll see if things improve. Just having a look at the markets, I think we're multiple days in a row with canola up. Just be cautious with this one on a Friday, but it's up. But rapeseed is up as well, and your soybean oil is kind of taking a bit of a breather in the big day that it had yesterday. Palm oil is up as well, and the wheats are all down, and corn is down as well. Here's your May contract. If we were in those long positions that started off on Tuesday, Monday, Tuesday, we're looking okay on the May, and we're looking okay on the position for the July contract as well. Still looking to get back up into this area here for the new crop. Here's your price differential, and we're looking at $201 as the market was trading. You see a nice increase in valuation differential, but all that's going to do is drive the need to export canola to Europe with that kind of price differential. I don't know what it will take, but it's not going to take $201, that's for sure. Here's your rapeseed price that we've seen, pretty substantial increase. We're like 524, and the reason I'm pointing that out is because we're 454 on new crop. So there's a big difference between, or 484, sorry, 484. Still a big difference between old crop and new crop. There's a needing to see this price actually probably start to take an increase if there's still going to be short for the new crop. Soybean oil, like I said, a great day that we had yesterday, long green candle, but still tracking below the 50-day moving average. Still a little bit more upside needed to get above that, and that would actually be a good bullish sign. Palm oil at the top end of this channel that they have up on here, still not going to make higher highs from what we made back in November. Crude oil, and there's been some stories out there already, and I talked about it yesterday, but there's maybe that relationship with crude oil is going to be a little bit stronger than it has as the Trump administration is talking about some sort of incentives or minimum amount of gallons of renewable fuel being manufactured on diesel and SAF. So I left this line on here. Soybeans actually broke through that downtrend line, which is a positive signal. Meal is still keeps going down. Canadian dollar, if we're just going to measure this distance to the year, it's maybe 3/4 of the way, but yeah, not bullish, not bearish. Wheat, here's the dog story. It's been going down. It's been pretty devastating on the market. But what tends to happen is if there's a pull down here, there's up for April, and that's just around the corner. So hopefully those crop reports and actual measuring of the winter wheat is going to give us some signals if there's any problems out there. Chicago, it made a lower low. The Kansas has not though, but it's definitely in this downward trend. Needed to stop here soon. So here's the positions that we put on, and this is not helping. This makes money going up into the green, not into the red. Hard red winter wheat for new crop still. It needs to stop here. Corn, if it breaks through, it's got to get down to 442, I think it is. Yeah, before you make a lower low, but it's still not a good trend, as you can see. Corn for new crop though has made a lower low. So this is the December. So not a good setup, not a good sign. Soybeans, I don't know why I put that one back in there. Live cattle, I'm just showing deferred months, and it looks like it's on its way back up. The cattle on feed report that came out last Friday, it's finally recovered from all of that, and it looks like it's going to keep going there. As the number was lower than expected. There was actually I think there was a report on cold storage as well, and that's usually a pork as well, but I think that might have been a bit positive there as well. And that's all I have.